All right, good morning, Trade Pros. Welcome to our morning market update for Friday, February 21st, Georgia Trade Pro Academy. We made it through the week. All right, sorry to YouTube. We had some issues this morning with the stream, so you might have seen two show up and then they got deleted. The third one's a charm. All right, so here we are. We got quite a good and long update for you this morning. Stock market yesterday sold off pretty aggressively for the first time in a while. All right, and traders were just asking, what the hell is going on? How come it's dropping so much? And to answer your question, this is more typical of a stock market. Anyone's been trading the last 6, 7, 8 years, and that's where their career started. You don't have many moments where you experience a lot of downside, but the downside is a healthy part of the market. And while everyone yesterday was scrambling to figure out what's causing this downside, we were just shorting it. All right, that's all you can do. Sometimes shoot first, ask questions later. That's how you make money in this industry. And by the time you justify why something has happened, you've missed the opportunity. So the question for traders is, what's important for you, to make money or to be right, and to know why? And so, but there is, in retrospect, you're always going to find what caused an event. All right, and that's the problem, is that you got to wait until it's retrospect, but the opportunity isn't there once the explanation is out. All right, so here was the explanation. At the time, we didn't know this. We were just focusing on the trade, and we're selling and saying, hey, look, there's a lot of downside momentum. Do not buy this market. Try to get on the short side. Yesterday's bias in the morning was lean to sell the early morning rallies, because we thought that the downside is going to be the side that it opened up to. And sure enough, here we are. All right, so the coronavirus concerns are growing because it's starting to spread more outside of China. I think that's where the market saw some fear and decided to sell off. All right, it's becoming more than a regional epidemic. It's starting to spread worldwide. The number of deaths now stands at 2,247. In South Korea, we went from 31 cases to over 156 in just 5 days. Doesn't sound like a big number, but the growth factor is a big number. So if we grow at that pace again, all right, we're looking at 750, 800 cases by this time next week. And so that's where the trouble and concern is that it's spreading to outside of China. Now, I know South Korea is still regional. It's near the area, but it's, one country after another, this thing could spread. And the market took a little bit of caution. I wouldn't call yesterday's dump a crash by any stretch of the imagination. It's a normal, healthy pullback in a bull market. Those things have to happen. Everyone can't pile on to the long side and all make money together at the same time. I just heard a news squawk. Good morning, Craig Lee. Will. And the other Will as well. All right. So we have some reviewed concerns and fears. Chinese car sales as a result of these coronavirus worries and woes are down 92% in the first 16 days of February. That's a huge, dramatic number. All right. Car sales down 92%. That's massive. And the IATA, the Transportation Administration, estimates losses for Asian airlines to be around the $28 billion marker in 2020 so far, based on canceled flights. When you have no free flow of movement of goods or people, all right, and people are just quarantined and locked in at home, the economy is going to take a hit temporarily. We already know that. And so the market's just factoring some of this in. In South Korea, there's also an alarming prison outbreak of the coronavirus going around the prison system, to 500 plus people already infected. That's an interesting statistic on its own. On all this late week fear, obviously gold prices have rallied. Gold's up to 1650 overnight. Very close. 1650 didn't quite hit it. Somebody's going to say, no, only went to 40.20. All right, 1648.20 the futures overnight. Highest level since February of 2013. All right, and when you ask yourself, hey, how come gold's going up while markets are all-time highs as well, stocks in the U.S.? Number one, the Fed is providing stimulus. When the Fed's buying $60 billion worth of bonds and putting that money into the market, all right, it's going to stimulate assets and it's going to prop the assets up. For a very long time, the pace of stock market growth has surpassed economic growth in the United States. And we know that's on the back of a lot of Fed stimulus, the Fed put, and the Federal Reserve just cutting rates and providing more liquidity to support the price action of the stocks. If you look at it, Europe's been doing the same thing. Europe's been stimulating. They haven't raised rates since they started their fiscal stimulus program. All right, Japan has been doing it for decades. All around the world, we're onto this new wave of free money. Lots and lots of new and fresh free money circulating in the economy. It's pumping asset prices up. That doesn't give a clear picture of the economy overall, though. And I think the overall global macroeconomics, if you look at stock markets globally, there are many markets in Asia and Europe that haven't surpassed the highs in 2008. All right, think about that. S&P 500's way on to new all-time highs from 2008. Other global markets haven't. So because their markets are more representative where the economy's at, they're putting more money into gold. So gold's getting bid because number one of the Fed, number two, there's a lot of demand for it internationally. Not in the US markets because stocks are making a good annual return. But in global markets where stocks aren't making good annual returns and they have negative yielding bonds, you're going to have to put some money to work somewhere, and they're all putting it in gold. All right, especially Asian countries have really been divesting it from U.S. treasuries and putting it into the gold market. So gold's up. That's great. Good for gold. On to what is it, 6.5-year high, 7-year high. All right, overnight we also had some data. EU manufacturing flash services came out surprisingly higher, along with their composite flash numbers and their manufacturing activity. So the European Union's higher print is supporting a little bit of this equity. The downside, it's washing it away and giving it a little bit of a temporary bid, if you will, or some market buyers. In France, same deal. Everything's up other than manufacturing activity, which fell a little bit, but flash services and composites are up. And in Germany, same deal. They beat surprisingly in UK. Other than flash services, they were down, but their manufacturing and composite numbers were up. Up, excuse me, which is a good thing. And so it's a bit of a surprise. So the markets this morning have this new information. What it suggests is that at the moment it's isolated to one area, one region. So the economic fallout there is expected in China, in Asia, all right? But in the United States and Europe, so far we're not seeing an economic fallout as a result of the coronavirus. So this is actually a pretty positive thing to see heading into the Friday of this week. All right. Key earnings on yesterday: Fitbit down 1.2%, missing expectations, and they guide lower revenue. Dropbox up 10%. They beat their fourth quarter results, and they announced a $600 million buyback. Domino's Pizza up 25%. All right. And Viacom down 18% based on their merger expenses. One-off item, but expensive. All right. Today's markets: Japan's down 0.4, Hong Kong's down 1.1, China's up 0.3%. In Europe at midday, everything's flat across the board: London, Paris, and Frankfurt. United States futures are down 0.5% in the Dow, 0.5% on the S&P, another 0.6% on the Nasdaq. And crude oil this morning is down pretty big, nearly 2% to 52.84. We went all the way down to 52.68 on the overnight low print, and now we have rebounded on the open slightly. But we are getting lower lows and lower highs in crude. Back to the downside we go. All right, Houthis attacked or attempted to attack a Saudi facility this morning, and that wasn't enough to make oil pop. All right, the fear of the fallout of demand on oil because of coronavirus is outstripping even a potential facility disruption. Why is that? Because for many years we've known oil's been oversupplied. But right now it's a two-factor hit on oil. It's oversupplied and there's less demand than usual. All right, that's a bad thing. That's a bearish occurrence. So we're going to track with that. All right, gold prices are up 1.1%. Like we talked about, Bitcoin's up 1.2%, still shy of 10,000, slightly below it. This morning at 9:35, Fed's Kaplan's going to speak. 9:45, we're going to have PMI composite flash numbers, super important for the United States. Keep an eye out on that. You can expect to see some volatility. Top of the hour at 10 a.m., we got existing home sales. While Brainard is speaking and Fed's Bostic is speaking. Bostic is not a voting member. Brainard is. Monetary policy for the next recession is the topic of discussion at 10 a.m. That's going to cause some volatility if some new information surfaces, especially from Lyle Brainard, who is a voter currently. And if she discloses anything, we could see a lot of activity. And 1 p.m. Baker Hughes rig count for oil traders. 1:30, Loretta Mester is speaking. And Fed's Clarita is also speaking at 1:30. So we got a lot of Fed speakers on today's calendar. Watch out for one-off statements that could cause some temporary volatility in the market. All right. Today, if you start to see more volatility, you could widen the stop a little bit and decrease the size you trade with. Just make sure that your risk factor stays the same per trade. Let me see some of the questions here on YouTube. You guys are funny. I like that line, Maximus. Of all the comments today, that's my favorite one of yours. Gold will always be worth something because most people can't afford it. I like it. Craig, you're welcome. Trade Pros, love you guys all. Have yourself a fantastic weekend. Thank you for tuning into our morning market update. Apologize for a little bit of the disruption this morning, but we had some technical difficulties. We'll be back on Monday morning. Have a great rest of your weekend. On this market, we're seeing, I think, a little bit of a upside momentum this morning, and then probably mid-morning reversal and downside we go. So early morning, I'm not saying buy the dips, but I'm saying we could get a little bit of pop, and I think late afternoon we might sell off a little bit more. But there's also the Friday big influx, the Friday ramp, as it's called, where money just comes into the closing bell and bids it up. I think this Friday will be different. I think this Friday, a lot of institutional money will actually come into the closing bell, selling some of their shares and some of their futures positions to get some gains, lock some profits going into a weekend where you don't really know what's going to happen. You know, we close out Friday at this number. Monday, we might find out the cases are disproportionately higher and you haven't had time to adjust your orders and you're gapping down 30 points on the ES. So I think a lot of smart traders are going to take profit today from the long-term basis as well. Take a little bit off, take a slice of the pie away, and see what happens from there. So I think that'll lead to some selling. So be careful today. We could open up the downside. If you get back above 72, then you'll probably see some bullish skew. You guys take care. Love y'all. Be good and stay out of trouble this weekend. I'm not bailing any of you guys out unless there's a good reason. Peace out. We'll see you on Monday. Have a great weekend. Bye. Boxy, I'll send over to you for an all update. I just skimmed it. I didn't want to take your spotlight.